Good morning. This is the video newsletter for Buy Sell Short for Monday, September 6th. Happy Labor Day to everyone. This is going to be a really short video because, with the long weekend, the market that we had on Friday, we're really not long a whole lot of stuff, nor do we want to be, at least for the very near term. We're looking at the Dow daily chart, and unless you had your head in the sand Friday, big down day on Wall Street. The headline reason, of course, was the jobs report, but that, in my opinion, really was not the reason we are down so much. We continue to get influenced by the shitstorm that is Europe, and that same European crap was floating around again on Friday and had the futures down really big before the jobs report came out. No one is surprised that the jobs report is as bad as it is when you have the kind of fiasco we had going on in D.C. in August and the large deficit spending cuts we've had since. Really, when you look at it, it's no coincidence that the last big jobs gain was back in April, right when they started chopping the deficit. And here we are 3 months later, and instead of creating 150 plus K jobs a month, we're making zero. This is what happens when idiots get in control in D.C. That's essentially it. And we're feeling the impact of it right now. Going into tomorrow's session, just looking at the charts right here, looking at, we're oversold on the 15-minute chart. And if I was just going off this chart, I would look at and go, okay, RSI, 30 and bouncing. Stochastics, 20 and bouncing. We had a really big sell-off on Friday, down 250 points. A lot of that, other than the news, was traders just not wanting to be long going into the weekend. So I would rightly assume that we could see some sort of bounce tomorrow. That's sort of up in the air right now because, in case you haven't been watching the news, gold prices up above $1,900 an ounce. And the reason, again, is Europe. And this time, Germany is front and center. They're going after the Germans now. Merkel had another local election today and lost some more seats, some more confidence, and you've got that German debt worries floating around out there. And also, in case you didn't know, this Wednesday, the German High Court is going to make a decision on whether Germany's participation in the Euro bailout fund is actually legal. So you're going to have a lot of scared, a lot of BS floating around over the next day into that decision on Wednesday. If we do see no bad news out of that, we could be in store for a nice little bounce. Volume should start coming back into this market now that the hopefully summer doldrums are over, and we've got the Fed meeting on September 20th and 21st to look forward to. We've got the president's job speech this Thursday, which I'm sure the GOP will slam no matter what's in it, even if it's one of their plans, because that's just the kind of environment we are in back in D.C. right now. Dow daily chart. You can see I drew this line. Essentially, resistance is 11,600. Even though we got that spike above, we really kind of held that resistance after those two spikes, and now we're down quite a bit from there. You can see our uptrend support is around, let's just say, 11,000. Even though things look really, really bad, each and every time we've had some of these 2-3 day sell-offs, we've been putting in higher lows since that early August bottom after the S&P downgrade. So that is bullish if we were to look for something bullish and, in all the crap that's floating around out there. RSI weakening a little, as is stochastic. So we could, definitely looking at this chart and the indicators, see some downside, at least tomorrow, unless, we get buyers coming back in and saying things are really, really cheap, or we get some sort of good news out of Europe, which, is really unlikely. As you can see, SMH, right now, I would be looking to rebuy our shares that we sold on that nice little rally last week. I would only go in max a half position over the next couple of days here. What I would be looking to do is buy a break of $30. And as you can see here, actually, let me try out a new little tool on this thing here. As you can see, $30 is the level I would be looking to buy for a breakout. And then our target would be up here at that 50-day moving average, up there at 31. Again, this chart looks like pretty much every other chart that's out there. Russell 2K, small caps, no real surprise. down, what, 6-7% over the last 3 sessions after that big move. But as you can see, Russell also has a higher lows trend in place, unless, of course, we break below that 650 level, then all bets are off. But, you know, it's been a very frustrating market over the last couple of months, and we've been in essentially a holding pattern. Essentially, we've been just protecting our capital, which is what you do in markets like this. You know, we've been trading these markets for over 10 years. We're pushing our 10-year anniversary for the newsletter, and this is how we've played every single crappy market the exact same way, and each and every time after a really bad market, a mania comes, and we're getting really, really close to that, in my opinion, and we could see that happen over the next couple of weeks, especially if we get some sort of QE3, some good jobs news from the president, and, you know, finally some sort of resolution, at least for the near term in Europe. So, you know, this is the time of year where stocks tend to underperform, but this is when the groundwork is laid for the next 6 months of fantastic gains. And usually the September-October period sets us up for a really, really nice November, December, January, February time frame. You know, even if we just go off the playbooks of the last couple of years, we should be entering a very nice range. And for now, we continue to maintain high cash, 90% plus overnight. I will be back to that no more than a half position stance on plays and going from there. Now, some stocks we could keep an eye on. You know, I was pulling up some of the large cap stocks because those are what are going to lead us back first. And there's not a whole lot of bullish action in these. I mean, they essentially mirror the indice charts. Here you've got Google, ugly candle on Friday. You know, you've got downside to the 490 level, but you could see it find support here. Apple is an interesting one. It dips below the 50-day moving average on each of those last dips and then rebounds. So if this one got down to the 360s, you could be in store for a nice $10 move, especially if the indices start to move. Now, one that is a favorite of mine this time of year, the traders definitely want to keep an eye on, is Amazon. Now, it's a little early to be entering Amazon, but if you pull up a multi-year chart of Amazon, each and every year this stock bottoms in September and then goes on a fantastic run into year end. You know, this is the banner child for Christmas plays, has been for as long as I can remember. Now, where would I like to pick this one up? I'd love to see it back under 200 again. And then possibly you could pick up some January call options on it or start to nibble in a long position. There's rumors, well, not rumors anymore. Google's coming out with, or Amazon's coming out with their Android tablet. It's going to be called the Amazon Kindle. Rumored to be 7 inches, rumored to be under $250, which could be a big game changer for the holiday season. So this definitely, and actually let's pull up a 3-year chart of Amazon here right now, just so I can show you what I'm talking about. And you can just go back and look at the historical prices. So let's do a little annotation here. So we're going back. Here's September in 09. As you can see, bottomed out in the 70s. And then into December, 100% move. Last year, here we are, September, was trading around 120. Going into December, $70 move. 2008, it ended up bottoming later in November, but that was a little, well, we knew what was going on back there. But then just look what it did going into January. Ended up putting in a 50%, oh, actually, no, give that 30% move. So that's just going back the last 3 years. You could go back a whole bunch of years and see a similar trend. This is the Christmas stock. As to are the gamers, which we've been kind of playing over the last few days, but definitely a sector to keep an eye on. So, you know, even though we're tiptoeing around this market right now, we're sort of, it's time to start looking out a little bit further now for the next seasonal run that typically comes around this time of year. A lot of crap storms out there, but I can tell you, after trading markets for over a decade, this kind of market always comes to an end and is always followed by just fantastic action in our favorite area of the market, small caps. So going into this week, you know, we're going to continue to take a cautious stance tomorrow, and actually, you know, probably for the rest of the week, unless we really see some heavy volumes and some big upside moves, and, you know, some positive news from Europe. we're not going to be getting all too aggressive. Let's bide our time, take these small intraday scalps, and then if we do get through this crap storm this month, we should be in store for some very nice gains. Now, I'm going to send out an email shortly. We're going to start doing weekly webinars, free webinars after the market close. We're going to start our first one tomorrow, about 30 minutes after the open. So I'll send you guys the details on that. If you've got any ideas or any things you would like to see on these webinars, things you'd like to learn, charting, etc., anything, shoot me an email so we can put together a class or a schedule of classes and webinars that we're going to hold. We're going to try and make this a weekly thing starting tomorrow, so watch your inboxes for information on that. PopScan, only a couple of plays on it, nothing really to jump out about or jump up and down about, so no PopScan going into tomorrow. Let's just see what happens in the morning. If we have a nice little gap down, it might be something we can look to pick up some big dippers and go from there. So that's it for the video. Enjoy your Labor Day, and I'll see you guys in the chat room tomorrow. Goodbye.